The housing market is falling apart. The housing market could face one of the worst blows to date. Some experts predict that the housing market will crash. According to Mark Sandy, the chief economist at Moody's Analytics, mortgage rates are sky high, prices are sky high, and there's no inventory. This may be the worst time in my living history for the home buyer. It just doesn't make sense. The housing market will have an unprecedented crisis. It is always said that the housing market was always a solid and powerful business, something that could never fail, but that changed when the financial bubble that surrounded the housing market burst in 2007 and 2008, totally changing the paradigm of the situation. The year 2023 does not look good on this topic, since experts affirm that it could get much worse than before. Will the United States recover from this problem? What will happen in the future? Before starting the video, I invite you to leave a like and subscribe to my channel to see more content like this. Without further ado, let's start with the video. Due to the financial crisis that we are suffering recently in the United States, and also facing an imminent recession in 2023, many economic items are seriously suffering the housing market. This would not be the first time that it would be seriously affected, because it was in 2007 when it had a crisis for the first time, and it was part of the recession of that same year. The financial crisis of 2007 to 2008 was triggered directly by the collapse of the housing bubble in the United States in 2006, which led to the so-called subprime mortgage crisis around October 2007. The repercussions of the mortgage crisis began to manifest themselves in an extremely serious manner from the beginning of 2008, first spreading to the US financial system, and then to the international one, resulting in a deep liquidity crisis, and indirectly causing other economic phenomena, such as a global food crisis, such as the January 2008 stock market crash, October 2008 global stock market crash, the global economic crisis, and the Great Recession. That is why the fall of the housing market is one of the most feared things in recent times, since if it fell, it could have a domino effect that would create profound chaos in society, poverty, hyperinflation, company closures, and the consequent layoffs of employees, which always ends in families torn apart by poverty in a country that has great resources and wealth. But all this is useless with an infected market. An example of how the housing market fell is the film The Big Short, in which a group of people began to realize that the housing market was beginning to be a financial bubble. And in this film, the whole process was reviewed until it fell completely, taking an entire country along with that crisis. But now back to the present. How are you doing today? How is it affecting you? Added to the financial crisis of 2022. The housing market is doing worse than you think. Mortgage rates have recently surpassed 7%, reaching the highest since 2002, and more than double what most borrowers used to pay near the start of the COVID-19 pandemic. Between prices with high rates and rising rates, the typical October homebuyer paid 77% more on their loan per month than they would have paid last year, according to Realtor.com. With a national median sales price of $425,000 and a 10% down payment, that equates to an additional $1,117 each month. A deal that really isn't worth considering at all, don't you think? Home contract signings fell for the fourth straight month in September, the same month as search interest in the phrase, U.S. housing bubble. It hit a 15-year high, according to Google Trends data. Searches were most popular in Idaho, where the median home price in Boise was $549,900, a staggering 51% increase since September 2019. The days of record low mortgage rates are definitely over, and not just it will affect society, if not the entire government, because it could cause a chaotic disaster in the economy. There is speculation that a lot may change in recent times, and not for the better, and it doesn't help to have a future recession around the corner, but all experts agree that the market is cooling off fast. Home prices are going to fall, but not to the extent that some buyers expected. Vendors are going to have to work again for their closings. Renters will finally get relief from rising prices, even as prices remain well above pre-COVID-19 levels. The vast majority of economic experts do not expect home prices to fall freely as much as they did so after the subprime crisis in 2008. This is in part due to stricter underwriting practices, a large increase in home price appreciation, and a cash investor class waiting to get in when prices fall. But the cuts, it seems, are coming. maybe 20 to 30% in the markets that saw the most appreciation, particularly in the Mountain West region and the South. Likewise, most homeowners will have earned some equity in the past 2 years, even after a drop in home values. On the other hand, existing home prices soared 45% from December 2019 to June 2022, from the start of the pandemic to the summer price spike, the largest jump ever recorded in such a short period of time, according to Standard & Poor's CoreLogic Case-Shiller Home Price Index. In July, the same index posted its first month-over-month price decline since January 2019, a relatively small decline of 0.3%, a sign that a reversal could be underway, although prices are still a bit off, 15.8% above July 2021. Morgan Stanley, the famous investment management firm, has predicted that home prices will fall 7% from the price peak in June 2022 to December 2023. Moody's Analytics expects prices to fall 10% from June to the summer of 2024, but if a recession hits, which is what we are all fearing lately, prices could fall by a fearsome 20%. In fact, there are some markets that say that this is not the case, because it could fall by 30%. Another famous firm, John Burns Real Estate Consulting, predicted in May, when mortgage rates had reached 5%, that national home prices would fall 10% through 2024. But with mortgage rates rising, the cuts could be lower and lower. Affordability was the worst it's ever been, and that was before 7% mortgage rates, said Rick Palacios Jr., who is the company's director of research. Also referring to this topic, he said that the only option for sellers will be to reduce prices, something that in obvious ways they will refuse to do, since if money is being lost due to inflation in this economy, they will not want to lose even more. It wouldn't make any sense. Other theories about what could happen to the housing market sound less fatalistic and hopeful. Rick Sharga, who happens to be the executive vice president of market intelligence at ATTOM, a real estate data firm, said he expects prices to fall only about 5% over the next 6 to 12 months before leveling off. He also commented the following: "It is about the weakness in the volume of sales, more than the sales prices." He also said that the forces that generated the fall in prices after the Great Recession of 2007 are not in play. That is, that there is a pattern that we are avoiding, or it is simply not happening. He also commented that there is very limited inventory for sale, and this is why the generic owner now has a mortgage with a low interest rate of 3.5%. So few would choose to sell today for fear of facing the costs of a much higher loan on your next property. This same inventory we're talking about has skyrocketed since the summer when mortgage rates started to rise, but they're still well below normal levels. Active listings were up nearly 27% in September, compared to September 2021, but still down 40% from September 2019, before the pandemic. While few markets have so far relinquished the price gains of last year, he said, big jumps in supply could be a precursor to price declines. The Phoenix metro area, for its part, has seen prices rise more than 4% in September compared to September 2021, but inventory spiked 167% in the same period, the most among the 50 metro areas, the largest in the nation. It also had the most homes with price cuts, with 2 in 5 listings having a price cut, an average discount of nearly 8%, or about $47,000. The pandemic and the war in Ukraine have definitely left a big hole in the US and world economy, but on the other hand, the problem with the housing market has its origins for a long time, but we will have to wait to find out if it really is a great irreparable crisis, or has some kind of solution with the passing of time. Whatever happens, on this channel we will keep you informed about this and other issues, so leave a like, subscribe to the channel, and if you are not, what are you waiting for? You will still be able to see content similar to this. I hope this video has been useful to you. Bye!